It was okay, sir. Good to
All right,
have you again.
all right, thank you. So we are going to continue from where we stopped in the last class, right? So we're in chapter one, all right? We're looking at chapter one, and where we stopped was statutory audit, the regulatory framework. And I was saying that in this aspect or in this segment, right, we have what we call small audit exemption. What I said is that prior to 2020, there is no exemption for any company. Once you're a company in Nigeria, you must perform statutory audit. You must carry out statutory audit. But in 2020, section 401, okay, 2020, subsection 1 said that every company shall at each annual general meeting appoint an auditors to audit financial statements of the company and to hold office from the conclusion of that until the conclusion of the next annual general meeting. However, Section 402, subsection 1 of CAMA states that a company is exempted from requirement of this act relating to the audit of accounts in respect of financial year. If, that is, ordinarily, once you're a company, right, you must appoint an external auditor that will audit the accounts, okay? And that external auditor must be appointed before the annual general meeting, and we hold office throughout the annual general meeting till the conclusion of the next annual general meeting. All right. But we now say that there are some companies that are exempted from these requirements. And what are the companies? These are what we want to look at now. He said it has not carried out that if the company has not carried out any business since its incorporation, what that implies is that the company has started, right? That's been registered, but they are yet to commence business. So because they are yet to commence business, they cannot carry out what we call what statutory audit. Okay. Number two, that also if it is a small company within the meaning of section 394, those are the two conditions that a company can be exempted from what statutory audit. Number one, it does not commence business as at year end. That's number one. The number two, if we fulfill the condition of what? A small company. Now, in that section 394, subsection 1 of CAMA 2020, a company qualifies as small in relation to its first financial year if the qualifying conditions are met in that year. All right. So these are the conditions. Section 394, subsection 2 states that a company qualifies as small in relation to subsequent financial year if the qualifying conditions are met. It's still part of it, right? These are the conditions. Number one, it is a it is a private company. What that means is that the company is not a PLC, it's not a publicly listed entity, right? Number two, its turnover is not more than 120 million naira or such amount as may be fixed by the commission from time to time. So this will vary from time to time. But what we have in CAMA 2020 as amended is that the turnover of a company I want to be regarded as a small company is that that company turnover must not be more than 120 million naira per annum. Okay? Next one, its net asset value is not more than 60 million naira, and such amount as may be fixed by the commission from time to time. All right? Then next one, none of its member is an alien. What they mean by alien is that there is no foreigner in that board. Okay? In the board, the shareholders, the board, they don't have any foreigner. All of them are what? Nigerians. If you have somebody from Ghana, you have somebody from Benin, you have somebody from Kenya, you have somebody from India on the board, you cannot consider such company as a small company. Okay? Then none of its member is a government or government none of its member is a government or government corporation or agency or its nominee. That is, if you look at some companies that exist, they have some government nominations or government nominees as part of the board. Okay, but in the case of a small company, you must not have any member that is a representative of what? Of the government. And lastly, in the case of a company having share capital, the directors between themselves hold at least 51% of the equity share capital. You can call that a small company. That is, the majority shareholder or the majority shareholding of that company rests with what? Rests with the directors. Okay? Rests with the what? The directors or the owners of the company. That's what it means. That 51%. That is above half. Okay? 51 is above half. That means 49 will be considered as what? Minority. So if they have 51, they can be considered as a small company. So, and what you need to realize is that for you to say that the company is qualified as a small company, it must satisfy all of these conditions, not one, not two, but all of these conditions that have been stated and I've just explained now. Not one of it, not two of it. The 6 conditions must be satisfied. Okay? So you need to get that, all right? So the next one, any question on that before we proceed? Any question?
No, sir.
Okay, so we continue. Now, for you to act as an auditor in Nigeria, right, there are 2 approaches that are available. There are 2 approaches to be able to act as an external auditor in Nigeria. There are 2 ways you can get to act as an external auditor in Nigeria. Okay? But the one we are using, I will tell you the one we are using, and I'll tell you the ones we are not using. Now, the 2 ways are either by self-regulation by the audit profession, or the second one, regulation by government. The first one I said, self-regulation by the audit profession. The second one is what? Regulation by government. Now, the one we are using in Nigeria presently now is that approach that is called self-regulation by the audit profession. What that implies is that a professional body will be empowered. Okay? A professional body will be what? Will be given the what? The responsibility, legal responsibility to create a framework and enable environment where the external auditor can be what? Can be appointed, can be trained, appointed, and be able to perform their assigned statutory responsibilities. Okay. Now, ICAN was established under the Act of Parliament or by the Act of Parliament, Act number 15 of 1965. So there is an Act of Parliament that established ICAN. So that means there is a backing of what? Of the law. All right. So that power, that backing of the law gave ICAN the powers or the responsibilities that it possesses now, and that is what it is using. Okay, and that power states that ICAN has the following responsibilities to be performed. Number one, you need to offer professional qualifications for auditors and provide evidence that auditors possess minimum level of what? Technical competence. And that's what we are doing now. Before you can act as an auditor in Nigeria, you must have passed all the ICAN professional qualifying examinations. Okay? Then after you have passed, the next you are going to do is that you have to be inducted as a member of the institute. After your induction, you need to work in an audit firm for at least 36 months. After you have fulfilled all of this, you can now apply for your own practice license and you now become a registered or a practicing auditor, external auditor, right? That is the process. So ICAN is the one that make all of these things possible. The second thing that ICAN also does is that they establish procedures to ensure that professional competence of auditors is maintained. And what they do by this is that they ensure that only people that meet their requirement, their standard requirement, are the ones that can practice as external auditor. So there's nothing like a sentiment there. If you are not a chartered accountant, if you are not trained in an audit firm, you cannot become an external auditor. And that's what they mean by formed by only fit and proper person. Fit and proper person means that those that have been able to meet up with the requirements of becoming an external auditor. And before you can become an external auditor, you must have passed the ICAN qualifying professional examinations, you must have been inducted as a member, then you must have worked in an audit firm for at least 36 months. Okay? That's what they mean by fit and proper person. And they also expect that you act with what? Integrity. Okay? Then the next, still under that, right? One of the ways I can maintain professional competence is that they require members to carry out their work in accordance with appropriate technical standard. Now, the way we work as auditors or as an accountant is that we go by the what? By the laid down rules. Okay, we go by what? The laid down rules. We have guidelines that we follow when you want to do audit. That's why we call it international standard of auditing, right? All of these standards are what guides the auditor when he's performing his what? Engagement, right? And all of these must have been tutored, explained to the auditor so that when he's performing his engagement, he is properly what? Guided, right? So that is those are the areas that ICAN will also help to what? Put in place. All right. Another thing we also need to note is we have, like I said, we have the international standard on auditing. These are the guidelines, these are the regulations that guide the practice of audit and assurance in Nigeria, not only in Nigeria, but even globally, because it's an international standard, it's not local. We have our own local standard. Our own local standard is Nigerian standard on auditing. Well, this one we are looking at here is international standard on auditing, ISAs, okay? And these ISAs, they ensure that auditors remain technically competent and up to date with modern auditing practice. Okay. So what that means is that this with the ability to obtain technical standards, right? One of the things you need to know is that you must act in accordance with those auditing guidelines, auditing standard, international standard of auditing. All right. They also ensure that their members are kept up to date. How do they ensure that their members are kept up to date? They organize seminars, they organize webinars, okay? They organize trainings, okay? Now, all of these trainings are meant to do what? To provide the auditors, right? Continuing professional development, all right? To provide them with what? Continuing professional development. It also, another thing that ICAN also does is that they provide procedures for monitoring and enforcing compliance by its members with the rule of regulatory body. So what they do is that, aside from you being a member, okay, you are bound by rules and regulation of the institute, which are contained in the ICAN code of conduct, members code of conduct that you have started discussion on by the second facilitator, all right, the other facilitator. So what we are saying here is that in the ICAN members code of conduct, right, they have their do's and don'ts. You talk about the fundamental principles, 7 of them, right? Now, you need to inculcate the 7 fundamental principles in your day-to-day business and professional relationship. The likes of objectivity, integrity, and the likes that has been discussed in the previous class, right? So any member that failed to comply with these principles, that is, they are found wanting, or where they have breached any of these fundamental principles, and has been reported uh, to the institute, that is ICAN, such members can be what? Can be invited for what? Investigation. And if it's found wanting, then such person can be given the appropriate sanction. Sometimes it can even lead to the delisting of such members from the registered child accountants or registered auditing firms in Nigeria. It can get to that. Okay. In the previous dispensation or administration of the past ICAN president, that is Innocent Okusa, he was able to sanction 2 ICAN members because they got information, okay, and they were investigated. One of them stole 500,000 naira from a bank. I think he works in a bank, right? He stole 500,000 naira in a bank, and they asked him to come and explain his own side of the story because it was CCTV camera that was installed in the bank that that they used to detect him. Okay, and they asked him to come and explain. They invited him. He did not show up. Because he did not show up, the disciplinary committee or the disciplinary panel sat and said that he should be what delisted. The second one borrowed money from somebody and he delayed, he didn't want to pay. So when the person reported to the ICAN, the disciplinary tribunal, then they did their investigation. I think they invited um the ICAN member, and before his invitation, he had already made the payment. So what they said is that because he had complied, they only gave him suspension for 6 months, all right, as at that time. So to tell you that all of these things are not things that are just written in black and white. They actually implement them, okay? It's been a while. In fact, this is the first time I'm hearing, well, no, not even the first time. This is a first time in a long while where I've heard of this. There was a time that former ICAN president was also was reported and was investigated. So she's a lady, past ICAN president. Her friend said that she borrowed 25 million naira from her to do a business, and unfortunately, she didn't pay back. He didn't pay the principal. She did not pay any interest. That was why she reported the matter to the disciplinary tribunal. And the past ICAN president came on board and explained her own side of the story. She said that when she got the money, she was sick, that but she find a way. She drew up a plan that she was going to look for a way to settle that affair so that she will be cleared of the indebtedness. And that was understood by ICAN. Since you have admitted that you owe somebody and you have made plans to what to make the payment, it's not an issue for ICAN anymore. So the case was dismissed. All right. So to tell you that ICAN is an association that holds their members in high esteem, okay? So you can't afford to act anyhow. Another thing that ICAN also does is that they establish rules and procedure for the investigation of complaints against members and implementing disciplinary procedures where appropriate. I just explained that now, okay? You don't just hear from one side, you hear from both sides of the party. So that whatever decision they are going to take will be balanced, okay? They hear from all the parties and able to make a comprehensive or a balanced judgment. Okay, that is yes. Somebody is raising his or her hand. Who is the person? Zoom. I don't know your name. It says Zoom user. What's your name?
I am Tolu. Good evening, sir.
I can't hear you.
I am Tolu by name. Good evening, sir.
Okay, good evening. You're welcome. Please go ahead.
Sir, so I want to ask a question. And
Please
my
go ahead.
question is, so I understand when an ICAN member commits an offense, the person might be called to a panel and investigations might be carried out. But what about if when one is trying to discharge in the discharge of the fundamental principles, one is exposed to certain dilemma, ethical dilemma. The adept and the person needs assistance. So, for example, let's say the person has been asked to commit fraud, and the person refuses to commit fraud, and there's pressure on the person, and the person goes to. Can the person go to the ICAN to say, okay, this is what is
Yes,
happening,
now. Yes,
and
yes,
what I
yes,
okay. So
yes. The person can go to
what can ICAN do? What will ICAN do in such scenario?
now. Ways ICAN will handle that. There are several ways ICAN will handle that. Now, the first thing ICAN will do, and that was what you are about to discuss in the last class, ethical conflict resolution. I don't know whether you were in that class. Were you in that class?
No,
Chapter
sir.
2.
No,
You're not in that class. Go and watch the video. Okay? Watch the video. When the facilitator comes on board next Thursday, she'll take it off from there. But let me just say what ICAN will do. Now, ICAN will not just one of the things ICAN will do, firstly, is that before you even start your audit work, they will have given you some training. One of the training is this one you are doing now. This professional qualification examination that you are doing now, ICAN exam, is one of the first things It's one of the first places where you are going to learn how to deal with what? Ethical conflict. Okay, that's one of the ways, that's one of the things you are going to learn in your training, because you are going to see scenarios, you are going to see questions that addresses how you should deal with such situations. That's number one. Number two, where ICAN will do that is that ICAN will also have what we call mandatory continuing professional development. It's another level of training. So after you have qualified, that is one. The another level of training is that in the act of practice, when you are practicing as an auditor, whether you're working as an auditor in an audit firm, or you are working in an organization as chartered accountant or head of accounts, right? You will have what we call how to behave, how to do your way out of such situations, right? The other thing we also need to know is that the last thing I will do is that, okay, you have a, what do you call it now? We have like a procedure to investigating such issues that relates to what? Ethical conflict. Okay, because what you are saying now is ethical conflict. It's against your ethical values. You are not corrupt. Somebody wants to lure you into corruption. That is against your ethical values. So we have what we call ethical dilemma, right? For those of us that have done CSME before, we have what we call what? Ethical dilemma. So when you have an ethical dilemma, I can ask, what do we call it now? They have a forum, right? A department that addresses that. So we have the professional practice monitoring committee where you can report the matter to. Okay, you report to them in confidence. They are going to guide you on how to go about it. All right. But the first thing you need to know is that when you are faced with such situation, you have some safeguards that ICAN has also talked about. And that's why I said that if you had been in class when the second facilitator started, I know that she has not gone far. She really talked about the fundamental principles. And I don't want us to deviate from why we are in this class, okay? But I believe that by the time you take up the video of that class, that is chapter 2, okay? The need and concept for what do you call it now? Professional behavior, right? If you look at that, the conduct of professional behavior, professional conduct, right? You listen to that video or that audio for chapter 2. The part 1 has been sent on the platform. The second and concluding part will be shared with you next week by the end of the class. So if you are available, if you are available for the class next Thursday, all of these your questions, I've addressed them, right? But more insights will be put into it because we have what we call safeguard. Okay, we have threat. Okay, threat are those things that can put you in that situation. Then we have safeguards, okay, that you can use, okay, to wiggle your way out of some of these situations, okay. We have all of that. Aside from that, we now also have what we call ethical conflict resolution, which will be where the facilitator will take up from next class. I hope I'm able to answer your question. Mr. Tolu?
Yes, sir. Yes, sir. You've been able to answer it, sir. Thank you,
All
sir.
right, thank you. All right. Any other question before we proceed? Any other question before we proceed? We
None,
are
sir.
fine, right? Okay, so let's continue. So we go to the next one. I talked about the what do we call it? The eligibility to act as external auditors. Okay, eligibility to act as external auditor. That was what we were discussing. I said there are two approaches. Either you have the self-regulation by the audit profession, or the second one, regulation by government. Now, the regulation by government is just the opposite of self-regulation by the audit profession. Rather than for the government to have empowered ICAN, okay, or to have established a professional institute to regulate the practice of audit and assurance in Nigeria, what they will have done is to set up either a government ministry, a government department, or a government agency, okay, such as NAFDAC. NAFDAC is a government agency, right? We have NAPTEP, National Board for Technical Education, okay, NAPTEP, right? that is an agency of government. So government can set up a similar professional examining body, okay, to undo what ICAN is doing. So in the aspect of offering professional qualification, that agency will be responsible for that, okay? In the aspect of establishing procedures to ensure that professional competence of auditors is maintained, that body or that department or that agency would have been empowered to do same, okay? Then in the other aspect of disciplinary of erring members, okay? Disciplinary of erring members that we talked about here, enforcing compliance, right? That agency will also be empowered to do same. Or even in the aspect of training them, okay, to get them updated with current trends in the practice of audit and assurance in the world or in Nigeria, they will also be what? Empowered to do same. So that is the difference. But the one that we currently use in Nigeria, like I said, is self-regulation by the audit profession, in which case the ICAN is responsible for the practice of audit and assurance services in Nigeria. Okay, I hope I'll be able to ask, I hope I'll be able to make clarification to that. Are we together?
We are together. We are together with you, sir.
Okay, so we move on. The role of auditing standard. Now, like I said, the auditing standard serve as what? A guide. Okay? They serve as what? A guide for the external auditors in the practice of their what? Of their engagement, assurance engagement. So these auditing standards, there are many, they are not just one, there are many. One of them is the International Standard on Auditing, ISA, okay? International Standard on Auditing, look at it here, all right? So what that means is that it gives you like the step-by-step, okay, procedure on how to go about certain engagement, certain audit engagement, certain assurance engagement, okay? So in that also, it provides what we call what? Best practice, okay? It provides what? Best practice for the audit and assurance services, okay? Audit and assurance services. Now, one thing you need to also note here is that this ISA, like I said, it's not limited to only ISA. We have ISA, International Standard on Auditing. We have ISAE, International Standard on Assurance Engagement. We have ISRE, International Standard on Review Engagement. We have ISRS, International Standard on Related Services. Okay? We have ISQM, International Standard on Quality Management. All of these together, they are known as what? Auditing standards. Okay? They are known as what? Auditing standards. And they are issued by this body here, IASB, International Auditing and Assurance Standard Board, National Auditing and Assurance what? Standard Board. They are the one that is responsible for the publication of all of these standards, okay? Now, one thing you need to also note here is that there are processes to be followed before an auditing standard is what? Is published. There are processes to be followed before an auditing standard is what? Is published. So what are the processes? Now, the first thing they need to do is that they need to, before they come up with a new auditing standard, it must have been from a long, challenging issues that the auditors face or the auditors face when they go for their assurance engagement. So for instance, let's say when they go for audit, there's some particular area that always make them to have what do you call it now? Challenges or Greek, I mean, some trouble, okay, resolving some of those issues or some of those concerns, okay. We call them issues or concerns or observations, okay, and it has become something that is common, not only peculiar to Nigeria. There have been complaints from auditors in Nigeria, in Europe, in other parts of the world, and it's become a burning issue. That is, everybody is talking about it, right? It's becoming a trending issue. What the body will do, IASB, what they will do is that they are going to look at which of these burning issues, which of these trending issues in auditing they need to address, because there are many. They are going to take it from the one that is what that is most trending. So they will take it and do what, and do like a communique. They will do a write-up on it. They will do a research on it and say that what all members, because ICAN is a member of IFAC. Remember, when I started this class, I told us that the body responsible for regulation of audit and assurance in the world is International Audit and Assurance Standard Board, which I said is a subcommittee under IFAC. That is, IFAC is the parent body. Okay? IFAC is National Federation of Accountants, right? Now, because ICAN is a member of IFAC, National Federation of Accountants, automatically is also a member of IAASB. Okay? So what that means is that when the need arises for these trending issues to be addressed, IASB will not limit the issue, okay, to their own body only. What they will do is that they are going to spread their dragnet. They want to receive comments on what is the best approach to resolving these issues from other parts of the world, from other practitioners, okay, from other auditors all over the world. So they will expect all the member countries, okay, that are members of IFAC to send in their what? Their own input. When they send in their input, that their input becomes what? An exposure draft. Look at it. When they send it, when the IASB send communication out that they expect member countries, member professional bodies to contribute, to make their contributions, they will put a deadline to it. When they do this, it is known as what? The exposure draft. Okay? Now, they will say that, okay, we want your contribution all the way before so and so day. So after they have received the contributions of member countries or member professional bodies, right? They are going to look at all the contributions one after the other. In some areas, they are going to make some amendments, they're going to make some adjustments, they're going to make some corrections, right? They will do all of these things. The end of the day, by then they're able to harmonize all of this information that they have received. They will now make it and turn it to what? An auditing standard. It becomes what? An auditing standard. And that is when, so until when the standard is published, it does not become a standard until when it is what? It is published. So after they have agreed, they will approve it. Once they approve it, they publish it. Once they publish it, it becomes what? A guideline. It becomes what? An auditing guideline. Okay? Which will come in form of what? An auditing standard. I hope that is clear. That is the process of how auditing standards are what? Are made. Okay? That's the process of how auditing standards are what? Are made. Now, in all auditing standards, right, there are certain content that you must find in an auditing standard. Number one, every auditing standard must have an introduction. Yes, Ogechi, I'm with you. Ogechi, I'm with you. You raise your
Yes,
hand.
sir. Sorry to take you back a little. Just about the eligibility to act as an external auditor. You mentioned there are two types of categories: the
Yes,
self-regulation by the audit profession, and then you mentioned something about the government body.
yes, yes.
That aspect of the government body, I didn't see where you highlighted it on the material. I think you only spoke mainly on the self-regulation by the audit profession. So I'm just asking because we're reading, so it will be
Can you see my screen?
yes, yeah.
Can you see my screen?
Yes, yes. Okay, I've seen that now.
Can you see what I'm doing?
Thank you. Yeah,
Would that be all? Any other question?
that's fine. I needed to just see that. Thank you.
All right. So as I was saying, right, I said that the auditing standards, right, they have a format. There's a template that they must be presented. It has an introduction, that is what led to the auditing standard, all right, and what the auditing standard intends to achieve. Those are the objectives, okay? And in some instances, they will make some definitions because they will have, like I said, auditing is made up of what? Terminologies. So you need to define those terminologies, okay? Remember in your project, when you're in school those days, right? In your project, chapter 1, you have what? Definition of terms, all right? So it's similar to what we mean by definition here. So if there are some big uh, terminologies that need to be what? To be explained, they will explain them, all right? And because they are going to be using those terminologies more frequently in the standard, so they need to define it so that anytime you come across the definition or anytime you come across the terminology, you will have an understanding of what it meant, all right? Then you are going to have what? Requirements from which are shown by the word shall and are to be applied as relevant to the. What that means is that if you look at auditing standard, they will tell you that it's just like any regulation. Thou shalt not, you shall not, you should. You see all of those things there. So that's what they make use of. That is the word of what? The use of what? Shall. All right. The next one. If there's going to be anything that called application of any other explanatory material, which is for guidance only. So if they're going to make reference to any other, maybe some of those auditing standards are related to the previous one, or it has come to replace the previous one, they're going to let you know. For instance, the ISQC has been what? Has been replaced with what? ISQM. So when you see ISQM number, you used to have ISQC number 1. That has been replaced with what? ISQM number 1. ISQC is what? International Standard on Quality Control. That has been replaced with what? International Standard on Quality Management. So if you see the standard ISQM now, they're going to make reference to the fact that ISQC has been replaced with what? ISQM. I hope you are getting it. All right. All the other standard that I explained that time, look at them here. You can see them here, right? ISRE, ISAE, ISRS, you can see them. You can see all of them there, okay? So in Nigeria, like I said, we have our own Nigerian standard on auditing. And Nigerian standard on auditing is more like our own local version of auditing guidelines. I take it again. Our Nigerian standard on auditing is our own local auditing guidelines. All right, and our own NSAs are issued by the Financial Reporting Council of Nigeria, FRCN, Financial Reporting Council of Nigeria, in conjunction with ICAN. They work together to publish this NSA. All right. Now, NSA, like I said, is specific to Nigeria, while ISA is to the world, to the global. Okay. Now, what you need to realize is this. The NSA we have in Nigeria, some of them are what? A replica of what you have on the ISA, the replica of the international standard on auditing. Okay? But what you need to realize is this. There are some of those where there are conflicts, right? Where there are conflicts. Because sometimes somebody might ask you now, when you have a conflict, that is, you are at the crossroad, there is a conflict between the Nigerian standard and auditing, that is the way they interpreted a situation, in the Nigerian Standard on Auditing and the way they have interpreted it in the ISA. Which one would you take? Which one would you adopt? And the answer is this. When there is a conflict between the Nigerian Standard on Auditing and the International Standard on Auditing, the one that you should take, the one that you apply, the one that should be applicable is the one from the what? The Nigerian Standard on Auditing. The only time you are going to make reference to the International Standard on Auditing is where there is no replica. You don't have something similar at the local front. You don't have something similar in Nigeria. When we don't have anything similar, we don't have a auditing guidelines, auditing standard that is that's Nigeria owned, then you can apply the international standard. But when you have something similar from Nigerian standard auditing, that will be preferred, that will be applicable, that will be more applicable than the international standard on auditing. I hope that is clear. I hope that is clear.
Yes, sir.
Okay, thank you. So we go to the next one, audit report. All right, audit report. Now, section 404 of CAMA 2020, as amended, state that the auditor of a small company, the auditor of a company shall make a report to its member on the accounts examined by them and on every balance sheet and profit or loss accounts, okay, and on all group financial statements, copies of which are laid before the company in a general meeting during the auditor's tenure in the office. Now, what they are saying in all of this is that after you have examined the financial statements of your client, you are expected, you are mandated that you must prepare a report. That is a report that gives us the outlook of the activities that was performed or the activities that were performed, okay? Because there are some people that are going to rely on the report, your opinion, your audit opinion. There are some people that are going to rely on it. So you cannot just do an audit and keep quiet. The auditor's report is very, very fundamental. That's what we are saying here. Okay? That's what we are saying here now. That's what I talk about auditor's report. Now, what are the advantages of statutory audit? Why is statutory audit? What do you benefit when you do statutory audit? Number one, it increases the credibility of published financial statements. When you know that the financial statement that has been published has been audited by a credible audit firm or by a credible auditor, it gives what? Confidence to whoever is going to utilize the report for whatever decisions that they want to use it for. Okay? Another advantage, number two advantage is that it confirms to management that they have performed their statutory duties correctly. Because an audit report is an independent report. Okay? Is to confirm that whether the management, they are doing what they're supposed to do or not. So when you present an auditor's report, okay, it shows that you are saying that to a large extent, the management has either done the right thing or they have not done their work. It can either be either of these two. It can be either of these two, okay? Number three, it provides assurance to management that they have complied with statutory requirement, because the law says that at the end of every audit, you must prepare a report, all right? So that is another advantage. The fourth one is that it provides feedback on the effectiveness of internal control, because at the end of every audit, there is always a report on whether the internal control is weak or it is strong, because in the auditor's report, while the auditor is presenting the auditor's report, it's also coming with what? Management letter or a letter of weakness. We call it what? A management letter or a letter of weakness. Now, letter of weakness means opposite of strong. When something is strong, the opposite is what? Weak. Letter of weakness, that is going to highlight the weaknesses in the client's internal control system. It's going to what? Highlight or focus on what? The weaknesses in the client's internal control system. Okay? Then it is also called management letter because it is usually addressed to the management because management is responsible for putting in place a sound internal control system. Hope you are getting it right. These are some of the advantages of what statutory audits. Now, what are some of the, let's look at the limitations. That is, when there are no, let's look at the other side of statutory audit. Statutory audit means that you must do it. So, what are some of the downside of statutory audit? Number one, the cost of an audit can be very high. The cost of an audit can be very high. That is that money that you are going to pay the auditors to perform an audit. You will have plowed the money back into your business and you have yielded more revenue or returns on your investments. Okay. Number two, when there is an audit, right, it disrupts company's operation. It disrupts what? Company's operation, even staff's of operation of the company will be disrupted. Why? Sometimes they will need to carry out stock counts. And when there's stock counts, inventory counts, there's going to be um, a total shutdown of the machine, no production. There will be no production and there will be no sales. We need to say you are conducting an effective stock count. There must be no production and there must be no sales during stock counts. Otherwise, you will not get the right figure. All right? And that could be what? That could mean a lot for a company that is into manufacturing. Okay? Because any production day that is lost or production hours that is lost cannot be recovered again. All right? So that's the limitation. Third one, some items in the subject matter might be estimates whose truth and fairness will not be known with certainty or to some point in the future. So, like I said, audit is just about what? Taking samples. You take samples from the lot, from the population, and you're going to use the results you've taken from the sample to generalize or to make your conclusion. So sometimes if you have a defective population, it might have an effect on everything later on in future. Okay? Then most fraud will include an attempt to deliberately conceal the truth and misrepresent information. There are some instances where they carried out audits and some months after, the company folded up due to what? Due to fraud or due to non-compliance. There's a particular one that we knew about that just happened last year, Heritage Bank. They have completed their audit, they submitted everything to CDN, only for some months after they said that they have withdrawn their practice license. So that was how Heritage Bank went into what? Into liquidation. Yes, now they have started selling up their assets now. Okay. Now to the next one, to balance cost and efficiency, the auditor's routine uses sample rather than what test every item. I'll just explain that. It's based on what? Taking samples. You don't check everything. Okay? And that's a serious limitation. And it's because of time. Next one, irrespective of how robust the client system are, they will always incorporate some degree of what inherent limitation. What that means is that there is no perfect system. Okay? And that is why we have what inherent limitation. That is, there are some specifics, there are some peculiarities to every system. For instance, once you audit a bank now, it's inherent that you must be sure that there could be possibility of what? Privilege or theft. Privilege or what? Theft in a bank because you are talking about cash. It's an inherent limitation. Next one. Another limitation is audit evidence is persuasive rather than what's conclusive. What that means is that it depends on who the auditor is. If the auditor is somebody that has sweet mouth or that has a sugar-coated mouth, it can present his audit report as though he has done a perfect job, whereas he did not do anything. Okay? So that's what we mean by that. It depends on what? How convincing the auditor is during his what? Presentation. The more convincing he sounds, the better it is for him. Okay? And next one, assurance on internal control. So the auditor's report is usually based on what? Internal control. Like I said, you have to evaluate internal control. If internal control is weak, it's going to have an effect. It's going to have a negative effect or negative impact on the financial reporting. Okay? Then lastly, maintaining an effective system of internal control is one of the director's most important duties. What that means is that internal control is very germane for financial reporting. And the management has been saddled with the responsibility to put in place a sound internal control system. So they are the ones responsible for ensuring that all the risk, all the business risks have been identified, and they also ensure that they have designed and implement controls to address these business risks. Once you need to realize you cannot eliminate business risks, but you can mitigate them. You can mitigate them. Okay? Please mute your mic, please. Who just joined? Mute your mic, please. So another thing we also need to look at here is corporate social responsibility, or we call it sustainability report. Now, what we mean by this is that this report aims to demonstrate that the company has a strong social and environmental conscience and is actively engaged in improving social and environmental conditions. What we are saying here is this, right? Any company that decides to present a report on corporate social responsibility, what they are saying here is that they are just being environmentally and socially responsible. They are just being environmentally and socially conscious, okay, that they have to give back to the society where they make the what, where they make their money. It is not it's not compulsory that you must do corporate social responsibility. But any company that decides to perform social responsibility and they present a report, what that shows is that that kind of organization has human face, is concerned about what? The environment and the social impact is going to have on the what? On the environment. Okay? So that is all we need to know in chapter 1. Any question? Any question? Any question? Any comments? Any observation?
Hello, sir.
Please go ahead.
Hello, sir.
I'm with you.
So, sir, my question is because the topic, the explanation is on point. Well, I want to ask, so in exam, because ICAN can be very funny with the way they set their questions. In exams, so if we're to ask a question on this aspect, this area, the introductory aspect, what are those things that we should be looking out for, or we should put into consideration when answering questions?
Thank you very much for your question. Okay. Now, one thing, I'm coming. Just hold on. Just a minute, I'm coming. So one thing you need to understand is we are going to, like I said, at the end of each chapter, I'm going to give us assignment. And the explanation is that we are going to find time to, we are going to find time to, I'm coming, I'm trying to do something. We are going to find time to work on the assignment and get it across to me. Because like I said, I have the belief that most of us, not that we don't know, what's it called now? We don't know all these things that we have been discussing in this class. Most of us are uh, very, um, very knowledgeable on some of these things that we are discussing in the class. Okay, they are very knowledgeable about it. They have read this material, this study text like several times. They can tell you in verbatim what and what it contains. Okay, but one thing that is very clear is this: understanding it material is one thing, right? The second thing is your ability to be able to apply your knowledge, okay, in exam. Your ability to do what? Apply that knowledge, what you have learned to answering questions in the exam. That's what where you are going to gain what? Where you are going to gain mastery. Okay, that's where you are going to gain what? Mastering of the class or the mastering of the what? Of the paper. That's what they will tell you that, oh, this person is very sound on this area. All right. Now, now, what you need to, how you need to go about answering question in examination is this. First of all, you need to understand the question. Understanding the question is very key. How will you understand the question? Now, in an examination, they gave you a case study. You shouldn't rush to, when you give you a case study or they give you a question paper, don't rush to looking at the requirement. Read the case study first. Because if you go ahead and read the requirement for the case study, I can get it with you. Your understanding is going to be limited because your understanding will be focusing on those requirements in the question. Okay? Read the case study, understand the case study, read it 2 times. First one, read it very fast. Second time, read it slowly. Once you have read it slowly, the second time, you'll have gained mastering of what they are talking about in the case study. Then you now go to the case, you now go to the questions. Read the questions, then go over the case study again. All of this thing I'm telling you should not be more than 20 minutes to do all of these things. You read it twice, you read the requirements, that's the question. You go back to the case study and read it with the intention of trying to see how you can answer the question from the case study. But there are some answers on the case study that are inferred, that they are not on the case study. You have to think outside the box to be able to answer them. But if you have not understood the case study, how will you be able to think outside the box in the first place? So when I'm giving you assignments, what I'm testing there is that I want to see your applicability of the knowledge that you know to answering the question. So in your own best interest, once I give assignments, do the assignment. When you submit the assignment, do it your own. Don't look at suggested solution. Do it as though you are in an examination hall. Use your own knowledge. No assistance. Use your knowledge, your own knowledge, because you cannot deceive yourself. Okay, you cannot deceive yourself. Use your own knowledge. By the time you submit your answer, I will give you my feedback, my honest feedback, and if you work on that feedback, I can tell you, you go for the examination, you are going to pass. But if you don't do the assignment, how will I know whether you understood or you have not understood? That's my own feedback mechanism. So we are done with chapter 1 now. By tomorrow or even tonight or tomorrow morning, latest, I'm going to send us the question. Please, it's an attempt. Make an attempt. Even I will not tell you to answer or tell you may attempt the number of questions. So make an attempt. From there, you'll be able to see your weakness, your areas where you are very weak in how to answer the questions. But when you don't try, how will you get it? It's also important from now henceforth to start practicing questions. Start practicing ICAN questions, past questions. Start it now. From 2014 to 2025, May, start practicing questions. So when you tell me now that the syllabus has changed, how relevant are those questions that they did in 2014 to this one? It's not that shouldn't be your problem. Your problem now should be, how do I intend to answer the question? The syllabus has changed, yes, regardless of the syllabus, the change in syllabus, but the pattern of answering question has not changed. Okay? How they want you to present your answer has not changed. What has only changed is the syllabus. So you still need to revise and understand how they answer questions in ICAN exam. It's very, very germane. Okay? So like I said, so we don't overflow this matter. And I said I will send us the assignment. Please make an attempt of it. Make an attempt of it. So I hope I'm going to answer your question, sir. Hello, sir.
Yes, sir. You've been able to answer it. Thank you, sir.
All right. So I was looking at the course allocation. You saw the when I just flip it now. I flip through it. The next topic I'll be taking with us, right, is chapter 6. This chapter is what we are discussing with the second facilitator. They started it. Okay, it will be concluded next class. The next one after that is chapter 3, obtaining an engagement, chapter 3. Obtaining an engagement, chapter 3, talks about what happens in an audit firm. Okay, what happens in an audit firm. This is it. Talking about that. The other facilitator will take that with you. It's not what I'm going to take. All right. Then after this, you have planning. Hold on. Let me go there. After this, we have another chapter, chapter 4. In chapter 4, we are going to look at what? Internal auditing. All right. So the other facilitator will take this aspect too. Chapter 5, we have planning. All right. Now, that is audit planning and risk assessment. She will also take this aspect. Next aspect I'm going to take now, which I'm starting today. I can't finish it today because of time, and it's very bulky. It's one of the largest part of the syllabus. Okay, audit evidence. We are going to start it tonight. We are going to continue in the next class. Okay, so we are looking at audit evidence and sampling. Now, this is a new topic, like I said. We are commencing it now. What do we mean by audit evidence? What do we mean by sampling? Now, audit evidence is governed or is referenced by ISA 500. ISA 500 is National Standard on Auditing 500, number 500. Okay? ISA 500 clearly explain everything you need to know about what audit evidence. And it's from there I got this definition. This is any information used by an auditor to arrive at an opinion on which his report is what is based. Okay. Now, before I need to put perspective to this before we get to this point. Now, when you want to carry out an audit engagement, okay, you want to carry out an audit engagement in a client company, there are procedures you need to follow. The first thing you need to do is that you must have been given the go-ahead by the client that, okay, you can go ahead and and perform your audit. And that go-ahead is contained in the letter known as a letter of engagement. It's going to empower you to conduct the audit. Where you have not obtained the letter of engagement, you cannot commence the audit engagement. And if you go ahead and do so, you have only succeeded in what? Wasting your time. Because it will be of no value. It will be null and void and of no effect. Now, after you have gotten the letter of engagement signed by the client, you now plan your audit. Now, in planning your audit, right, you will have done what we call what? A preliminary audit risk assessment. That is, what are the things I might likely stumble on when I start this audit engagement? That's where your planning will come in. Now you're not going to plan. How am I going to ensure that at the end of the day, I will be able to satisfy the objective of the client, what the client intends to achieve? All of this will come under what? Planning. How many staff? How many days? What type of business? All of these things will have been handled under what? Under planning. Now, when you are done with all of this, right? You are now going to talk about what? Evidence. Now, in your evidence is very, very key after planning, because is the results you get from the evidence that is going to inform your what? Your audit report or your audit opinion. So this aspect we are discussing now is very, very, very important in any audit engagement. If you miss it at this point in the gathering of evidence, then you have missed everything about the what? Auditor's report or the audit engagement. So audit evidence, like I said, is any information used by the auditor to arrive at an opinion on which his report is what? Is based. Now, what we mean by this is that this information, right, could be any information, but mostly accounting information. Because the essence of the audit in the first place is to audit what? The financial statement. And when you're auditing the financial statement, what that implies is that you are going to make use of what? Accounting information or accounting records. Okay? Now, in an audit, in audit evidence, it must have two elements, two characteristics. In every audit evidence, it must have what? Two characteristics. What are the two characteristics? The audit evidence must be sufficient and it must be what? Appropriate. And that is why if you're going to write an exam and you come across a question on audit evidence, in your own best interest, rather than for you to be writing long grammar, for instance, you want to say that the auditor is able to gather information, was able to review documents, is able to review record, was able to do all of these things, rather than for you to be spending time writing all of these things. You might think that you are doing yourself a lot of good, but the time you are wasting in highlighting each of these words, putting it together in a sentence, is going to take, you wouldn't know, but all of these small minutes eventually will count at the end of the day. How am I going to say that later we gather information, review record, examine this, examine that, before he makes up his mind? Just say that later we obtain what? Sufficient and appropriate audit evidence. It's not about how lengthy your, how voluminous your answer is. No, it's about the quality, it's about the substance, it's about the content and the context of the information that is contained in your answer. So don't get it twisted that, oh, your answer, for you to say you pass all this, you must ask for extra sheet. Is a no. That is a fallacy. So you are going to use some of this audit terminology, because as I am saying it now, this audit evidence, this sufficient and appropriate audit evidence is an audit terminology that when you use it, the examiner will be very happy and say, oh, this person knows what he's doing. This person knows what she is doing. This person will know. So like I said, every evidence must have this element, these two main elements, sufficiency and what? Appropriateness. So what is sufficiency? What is sufficiency? Sufficiency relates to what? quantity. How much information would you require? How much information would you what require? That is sufficiency. Volume. How many? How much? To what extent? Why appropriateness talks about what? Quality. Appropriateness talk about what? Quality. From where do you get your information? What is the source of your information? What is the source of your audit evidence? It's very important. If the source is not credible, the audit evidence will not be what? Will not be credible. I take it again. If the source of your information is not credible, the audit evidence will not be credible. Is that clear? So we are talking about the source of your information, the source of your information, the appropriateness. You look at it from two sides. What are those things that's going to make your audit evidence to be what? To be of quality. We are going to look at two things. Number one, the relevance and the reliability. Those information that you are obtaining, are they related? Are they relevant? Are they of importance? That's where relevance comes in. Then reliability means the source. How credible is the source? So you're able to get information that is relevant and you are sure of the source and the information is sufficient, then you have what we call what? A sufficient and appropriate audit evidence. Okay? Now, before you say an audit evidence is what? Is sufficient and appropriate, there is a need for a test to be performed. There's a need for some tests to be performed. You have to test the where you're going to get the audit evidence from. And that will lead you to performing some two tests. Okay? You perform what? Some two tests. The first one is what? You used to call those tests before now compliance testing and substantive testing. But if you go and write compliance testing and substantive testing now in this 2025, I'm telling you, the examiner is going to be very cross with you. So the two tests they have been replaced with what? Test of controls and test of detailed transactions. Now, what do we mean by test of controls? As the name implies, test of controls are those tests that are performed to evaluate and assess the strengths and the weaknesses of the internal control system. While the test of the transaction is a test that is performed to validate and verify that those transactions, those accounting records and other information provided actually what exist. Okay? These are the two tests. So once you're able to establish that the internal
Sorry,
control system, yes,
the second one, please. Test of control and test of. I didn't get the second one.
test of detailed transactions. Test of detailed transactions.
Sir, could you please
Are we there?
explain the test of control again? Thank you.
As a test of controls are tests that are conducted to evaluate the effectiveness and efficiency of the client's internal control system. Are we together? The second one I said is a test of detailed transaction. And I said, this is a test that is performed to verify. This is a test that is performed to verify the accuracy, and completeness of individual transactions. Are we okay? Can we continue?
Yes, sir, can go.
Okay. Now, like I said, I've explained all this part before. Designing and performing audit procedures for obtaining audit evidence. I talked about planning. And I talk about the need to carry out a preliminary audit risk assessment. Okay, I've talked about all of this. So what that means is that so that you'll be able to know, because as an auditor, you cannot audit what you don't understand. Okay? You cannot audit what you don't understand. And one thing that you must also remember is that your audit plan keeps changing, or your audit plan can change. It's iterative. I'm taking it again. The audit plan is what? Is iterative. It keeps changing until when the audit is completed. So don't get it twisted that, oh, the audit plan, once you have designed it, once you have prepared it, it must be rigid. No. The audit plan needs to be what? Flexible. Because you might have designed it in such a way that you want to go this way. When you get to the field, if that way you want to go, that route is no longer sustainable. So you need to change it. So it keeps changing until when you are done with the engagement. Please note this. And you never can tell where this information I just shared now can be helpful in your exam. So when you are reading your case study, you have to read with an open mind. That is, you understand the use of words in your case study. You're not supposed to just read. Read, don't just glance through. Read with what? Comprehension. All right? So that is what I'm trying to say there. Okay? Any question? Look at what I said here. Test of control and test of data transaction. You can see them, right? Have you seen them? You've seen them, right? Can we all see?
Yes, sir, we can.
Okay. Just so you know, I'm saying things. You can see if I'm reading it, by now, most of us will have dozed off. You'll have been sleeping by now. I can tell you that I've read it. I'm just explaining it to you so that when you read it on your own now, you pick up this material and read it on your own. It's going to be very, very easy for you because you have an understanding of every aspect of it. Now, the next thing we need to talk about, right, is the what? Financial statement assertions. Financial statement assertions. Now, financial statement assertions are statements made by management. Financial statement assertions are statements made by management that the financial statement presented. They are statements made by management that the financial statement presented to the auditor is free from any material misstatement. Is free from any material misstatement. Have you gotten it? Have you all gotten it?
Oh, please take it again.
I said financial statement assertions are statements made by management regarding the financial statement presented to the auditor, are statements made by management regarding the financial statement presented to the auditor is free from any material misstatement. Are we there?
Yes, sir.
Okay. So that is financial statement assertion. There are three types of financial statement assertions. There are three types of financial statement assertions. Number one, assertion based on transactions and events. Assertions based on what? Transactions and events. Which are usually found in the statement of profit or loss, other comprehensible income. Which are usually found in the statement of profit or loss, other comprehensible income. Number two, we have assertion based on account balances. Assertions based on what? Account balances. Which are usually found in statement of financial position. Number three, we have assertion based on presentation and disclosures.
So the last one again, please.
Assertions based on presentation and disclosure. Which is common to both statement of financial position and statement of profit or loss and other comprehensible income. Which is common to both statement of profit or loss, other comprehensible income, and statement of financial position. Are we there?
Yes, sir.
Hello? Are we all there?
We are
Can
here,
I
sir.
continue? Can I continue? Can I continue?
Yes, sir.
All right. So let's now look at them one after the other. In all, right? all of those assertions, they are 13. There are 13 in all. There are 13 in all. All right? So let's look at them one after the other. Now, under the assertion based on transactions and events, you have 5. And these are the 5 you can see on my screen now. You have occurrence, completeness, accuracy, cutoff, and classification. Before we dive in, let me explain something to you so you have an understanding of how they come about the financial statement assertions. Now, the auditor wants to audit a client financial statement and he asks them, where are your financial statements? They gave the auditor, the external auditor, the statement of profit or loss, other comprehensible income, the statement of financial position, statement of cash flow, and all of those components of financial statement. And the auditor is asking them, how am I sure? Are you sure? The auditor will ask the management now because they're the one that prepared it. Are you sure that the financial statement they are giving to me now, that they don't contain any material misstatement? Now, mind you, I did not say misstatement. I said material misstatement. So there are misstatements and there are material misstatements. Now, misstatements are what? They are negligible. They are of inconsequential value. They are not very, very important. But every financial statement will have some form of what? Misstatement. Okay? Then what do I mean by misstatement? So you wanted to write 10 million 585 naira 999 no 10 million 585,999 naira. Okay, that's you wrote 10,585,999. It's just an example. But when you are preparing your financial statement, instead of you to put 10,585,999, you now did 10,585,900 as against 99. Supposed to be 999. You now put 900. That will be seen as what? A misstatement. It's not a material misstatement. Okay? I hope you understand. Because it's a rounding error issue in that instance. So it's a misstatement. But when you're supposed to write 5,000, you now went and put 500,000. That is a material misstatement. So that's why I said that financial statement is possible you have what? Misstatement. The auditor will not frown at that. But what the auditor will frown at is when you have what? Material mistake. And that's why you saw the definition. You said that these are assertions made by management that financial statement that are presented to the auditor do not have any material misstatement. So when the auditor asks them, how am I sure that you don't have material misstatements in your financial statement? They're going to say that based on this, their declarations, based on this, their what they have said, assertions based on what? Transactions and events. They will tell you that, number one, occurrence. That if you take occurrence, we are telling you that if you look at our if you look at our statement of profit or loss, that all transactions and events that we have recorded, they pertain to what? To the entity. Not to any other entity, but to that particular entity that you are auditing. That's what they mean by occurrence. And what the auditor will do is the auditor will now test that. Okay, the auditor will now check those transactions. Do they really belong to this organization or not? That's what the auditor will check for occurrence. Well, sometimes they could have some fictitious invoices. Okay? but they did not buy anything. So that's what they mean by what the auditor will check whether those transactions actually occur. They will see the evidence, that is the invoice. And they are going to see the what? They will probably ask for what? The evidence that those things were bought. Aside from the documentary evidence, they might want to see the item that was bought. Okay? And sometimes they can even go to the extent of what? Making some calls based on the contacts that they find on the invoices. The details they find on the invoice, they can call to confirm. As also, and so if you buy, if you supply this person, if yes, they will know. The auditor will verify all of that. The second one is completeness. The manager will say that yes, the information is what? Whatever you have, financial statement is what? Is complete. The auditor will ask them, how? How are you saying it is complete? They tell you that all transactions and events that should have been recorded have been what? Recorded. That is, they did not skip anyone. What that implies is that the company ends their financial statement, let's say, that was December 2024. And they are telling you that all transactions that occur all before 31st December 2024 have been captured. That's what they are telling you. That's what they mean by what? Completeness. That is, the auditor will not find anyone that has not been what? Posted. They're going to say again that, another we are telling you that they are free of material research is that the financial statement is what? Is accurate. The auditor will check whether the amount and other data relating to recorded transactions and events are recorded appropriately. For instance, the auditor will check that all the numbers, both amounts written in words and amounts written in figures, they are the same. Not that they wrote 50,000 in figures, but they wrote 500,000 in words. Okay? The auditor will check all of this. The auditor will now also tell them that one of the ways we have been able to achieve that, that's what we're talking now. One of the ways we have been able to certify that the information, the financial statement does not contain material mistakes is that we also apply what? Cutoff. What do you mean by cutoff? That is, all the transactions that we have recorded and the way that we have recorded, they happen in the period under review. So you're auditing transactions for auditing financial statement of year 2024, 31st December 2024. So if you look at the all the transactions, you will not find anyone belonging to 2023 or 2025. How do you mean by what? Cutoff. They are within the what? The period under what? Under review, the current accounting period. Then they also say that we also ensure that we ensure that all transactions were posted into the right account. That is what? Classification. So every ERP or every accounting software, they have what? Account code, chart of accounts. They have what? Chart of accounts. So you tell that we have posted into the right account. For instance, if the client is into manufacturing, they will need to tell you that there are two types of salaries in manufacturing. We have wages and we have what? Salaries. There are wages, we have salaries. Wages will form part of your what? Direct labor. While salaries will form part of your what? Indirect labor. And if wages form part of your direct labor, that means that it's part of what? The cost of production. If you still remember your manufacturing trading profit and loss account, your prime cost. The complement of your prime cost is what? Direct materials, direct labor, direct expenses. And if you add all of that together with all the other ones that we have talked about, you have what we call what? Cost of production. So you now talk of all the other finished goods, where you now have your salaries as part of the admin expenses. I hope everybody is with me. Hello?
Yes, sir.
Yes, sir, we're here.
Are you getting what I'm saying?
Yes, sir.
Okay. So those are the assertions based on transactions and events. Any question on this one before we move to the next one? Any question? Any comment?
No.
You're all good. Thank you. We go to the second assertion, second type of assertion. Assertion based on what? Account balances. And I say these ones are relating to what we can find in the statement of financial position. Because in your statement of financial position, if you remember those days when you are drawing up your ledger account, when you want to prepare the financial statement, your balance carried down, which eventually become your balance brought forward or balance brought down, is what you are going to have in your what? In your balance sheet, statement of financial position. So we are going to, that's why we call it assumption based on what? Account balances. So the other we say that in our statement of financial position, we ensure that all the assets and liabilities and equity interests exist. So you're talking about what? Existence. Like there are no fictitious assets, there are no fictitious liability, and there are no fictitious equity interests. That is, all the assets exist. All liabilities, loan agreements, they actually exist. They are not fictitious. The auditor will also ask them again. What else again? They say that we have right and obligation. What are you trying to say? Right and obligation. That the auditor will ask them, these assets that you have in your statement of financial position, are they yours or you borrow them or they are on hire or they are on lease? Did you buy them? Do you own them? Or you hire them or they are on lease? Because it's expected that there are some assets that you cannot afford to buy them because of their what? Because of their substance, because of their the cost incurred, the cost implication. Okay, because of what? Cost implication. So you need to what? You need to borrow. For some companies that are into drilling, oil and gas companies that are into what? Drilling. Some of the drilling machine, the companies cannot buy them. So what do? They go and lease them. They go and hire them. So what that implies is that if you go to their financial statement of such companies that hire or lease these drilling machines, what you find in their assets there will not be the drilling, the actual drilling machine cost. What you are going to see in their assets is what? The rentals they are paying as what? For the drilling machine. That will consider their asset. But if they go and put the drilling machine cost there, which will be very, very exorbitant, the tax authorities will come after them that they have to pay uh, some of those capital allowance and all of those things. You understand what I'm saying? So you want to establish that the assets that you have contained in your financial position, they're actually your own. And when they are not your own, you have proper documentation to say that, oh, you have a lease agreement or you have a hire purchase agreement to use them. Asset, what is the definition of asset? Asset is anything that you use to generate what? Economic benefits. That's asset. Anything that you use to generate what? Economic benefit is an asset in accounting. And your liabilities are what? Are your obligations. So you are taking a loan from the bank. The auditor will ask you, are you making your repayment as scheduled or as planned? The auditor will ask you, are you making your payment as planned or as scheduled? So that will be the assertion for right and obligation. So the right is to asset, obligation is to what? Liability. Okay? Right to use an asset, obligation is to what? Liability. Hope you are getting it. Then we also have completeness again under statement of financial position. They later want to know whether all information relating to assets, liabilities, and equity interests have been what? Have been recorded. For instance, you bought an asset. You bought a generator or a generating plant. Morocco, FG Wilson, Perkins, Cummins, you bought it. But when the auditor check your books, what they found there is just the invoice amount, the purchase price, the invoice price for that asset. The cost of transportation, the cost of commission, the cost of putting the asset to use, you did not factor it in. The freight cost, landing charge that you paid, you didn't factor it in. That means that your information is income. That means you're under, how do you say it now? You're undervaluing your assets. That means your completeness is wrong. That means what you have put there is you have undervalued your assets. Okay? Then another assertion was valuation and what? Allocation. Valuation and what? Allocation. What that implies is that you have to test your assets, liability, test your assets against what? Impairment. And it's there, IS 36, talks about what? Impairment. You must test your assets against impairment at least once a year. That is the kind of amount you have put in your books has not reduced or whether it has gone up. Okay? And where there are differences, whether it has gone up or it has increased or it has decreased, appropriate adjustments have been made to accommodate it. That will mean by valuation and what? Allocation. Any question? Any comment? Any observation? Hello? Comments? Observation? Questions? Are we together?
Yes, sir. We're together.
Please respond. If you have any question, let me know. The last one of the assertion is assertion based on what? Presentation and disclosures. And this one speaks to what? Your statement of profit or loss account and your statement of financial position, because both of them, your IAS 1, presentation of financial statement, that is going to be replaced with IFRS 18, right? Talks about what? Presentation. What are those things that you need to be contained in your what? In your statement of financial position and your statement of profit or loss. And also remember your disclosures, your notes to the account. You have notes to the account that pertains to statement of profit or loss, and you have some notes to the account that pertains to what? Statement of financial position. You have notes to the account for statement of financial position. You have notes to the account to what? Statement of profit or loss. Right? So what that implies is that we are going to see, because it relates to both of them, we are going to see that we are going to merge some of these assertions that we have talked about earlier on. Look at this one, occurrence and right and obligation. Occurrence happens in what? It appeared under assertion based on what? Transactions and events. Right and obligation appears under what? Assertion based on what? Account balances. You can see that they brought them together. That is, the author will check whether all the events, transactions, and other matters that occurred pertain to the entity. That's occurrence, right, and obligation. The second one, completeness. If you go back to what we discussed, completeness, we have it in what? Statement of financial position. We also have completeness under assertion based on what? Transactions and events. So we can see here that is, later we check whether all disclosures that should have been included in financial statements have been what? Have been included. Then we have classification and understandability. We have classification under assertion based on what? Transactions and events. Then understandability here means that the auditor will check whether all the information that is contained in financial statements, okay, are clearly expressed. Are clearly what? Expressed. Anybody that pick up financial statement can understand all the information that is contained in financial statement. That would mean by understandability, classification and what? Understandability. Okay? Then we have accuracy and what? Valuation. We have accuracy under classification based on what? Transactions and events. And we have valuation and allocation under classification based on what? Account balances. You can see that they fuse the two. So we have what? Later we check whether the financial statement and other information are disclosed fairly and at appropriate amounts. Are disclosed fairly and what? At appropriate amounts. Okay? Any question? Any comment?